Good morning, folks. It's 8 a.m. Chicago time on Thursday, the 28th of September, 2023. This is episode number 2546. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, so this morning, a few key pieces here to talk about. Looking at the convergent trading pre-market summary sheet here, we have a market that is pretty much mixed. We ran up a fair amount um, following the data that came out this morning, GDP growth and the initial claims, PCE, core PCE, which were all in line basically. We ran up a fair amount, and then we've come back, and we are basically unchanged overall. Mixed posture. Pre-market, Accenture reported basically in line. Nike after the close. Some good news today out of Europe. The Spanish and German inflation numbers were better than expected. The German inflation year on year prelim came in at 4.5%. Expected at 4.6 to 4.8. The prior is 6.1%. So a dramatic improvement there, month on month, 0.3%. And then the U.S. announced GDP growth here, Q on Q final at 2.1% in line. And then price index came in a lot better, 1.7 versus 2%. This is GDP price index Q on Q final. Initial claims still hot, 204,000 versus 215. That's not great. And continuing claims are pretty much in line, 1670, 1.67 million continuing claims versus 1.675. So that's where that is. The biggest thing right now is the government shutdown. They're just dilly-dallying and screwing around with this thing. It's a very, very political issue. Uh, the government funding, some generally some far right elements of the Republican Party, which controls the country's wallet basically right now in the House of Representatives, is basically putting a lot of pressure on the Speaker of the House of their own party to um, basically, in a way, put pressure on the president to not spend more money. But it's just politics. So the probabilities of a shutdown went from 75% on Tuesday to pretty much 100% for this weekend. And so this shutdown's looming. And the biggest concern for the market, of course, the government shutdown just means a lot of people don't get paid. Um, but for the market, of course, we just won't get the key numbers next week, potentially next Friday, and so we won't know what the labor condition is. That's a federal agency, and if there's no budget, then nobody's going to show up, right? China property developer Evergrande shares halted amid reports that chairman being placed under police surveillance. Not great. Look, there's not much here to talk about in terms of what's driving things. The market is really trying hard to find balance here. It keeps popping on the drop. We'll talk about that. We have several Fed speakers today, or central bank speakers today. I won't go through this calendar bit by bit, but in general, we do have pending home sales. It's a big one. Fed's Goolsbee is speaking now. There's a lot that's being rattled off through my news feed. And then we have pending home sales at 10 o'clock. Not expecting that number to drive anything. Natural gas after that. We do have some short bill auctions coming up, and then we get the 15-year mortgage rate as well as the 30-year mortgage rate numbers at noon Eastern. Looking at the S&P overall is balanced. balanced. The volume is quite heavy though, and this is a theme that's been going for the entire week, that we have quite a bit of volume going off at this time of day before the cash open. Remember, the volume is expected to be around 170,000 to 190,000 by the time the market opens, the RTA session opens, and we're already at 358,000, 358,000. The edge of what we would consider to be normal is 310,000. So there's quite a bit going off. It's not rollover, it's not expiration, at least not the monthly or quarterly, which is where we expect volume to come in. So this is an important kind of factor, that we're getting this heavy, 270, 280,000 contracts traded by the time the trader bite's going for the entire week. And then today, quite heavy. It looks to me like there's some OTF positioning going on, some pretty heavy uh, um, participation. It could be to hedge risk. Generally in futures, it's to hedge risk, and it could be to take positions as the market's getting cheaper and cheaper. Don't know. Crude oil today, the overnight session, it popped higher and it sold right off. It's trending down, but still it's a lot higher than where it was when it was in balance. Crude trading against the 93. Copper popping higher. Generally, this commodity kind of is a tattletale for risk on sentiment. So this is kind of an interesting pop in copper. Copper tends to pop right before the general market does, or positive news comes out in terms of productivity, manufacturing, things like that. So tomorrow we have September's month end. We have quarter end tomorrow. Uh, Tomorrow, expect some fireworks coming into the close. And, with the volume's been ramping up, of course, into the end of quarter, but generally it's pretty quiet for this time of year. Generally, you don't see that sort of thing happening. Coming into the end of the year, we do see volume kind of starting to escalate, but tomorrow is going to be important. We might see some fireworks into the close, so pay attention to the close tomorrow afternoon. What else is there? Let's take a look at what was expected yesterday. So yesterday, let me get rid of me from yesterday and replace it with me from today. Yesterday, what we had is, because of the way the market was postured, the expectation was for us to really squeeze that 43.50 and get back up and potentially break the one-time framing down into 54 and aim for 63. That was completely wrong. So my hypothesis, my main hypothesis for yesterday, was refuted about an hour into the session. We did end up running up at the close, but and we ended up testing this. If you recall, 43.22 was the line in the sand. Was the line in the sand that I discussed. That a test of 43.22, anything as long as it stays above 43.22, I'm going to be looking to buy pullbacks as the main idea, and then push for 54 being broken. As soon as 54 is broken, I'm expecting a spike, a pullback, and then this kind of grind up. That was the main idea yesterday. Again, that completely failed, but we did get the run up early. We did get the test of 43.22, and it looked fantastic. But when it failed, it set us up. It's clear that they couldn't hold the line in the sand at 43.22, so it set up a pretty strong structured short early on. So let's take a look at that. Let's walk back and learn from what we've done or what was expected. So just as a reminder, this segment of this stream is not intended to be like, hey, look at what I said and look how great I am type of thing, because I'm just like everybody else here. I'm just simply reading what's on the chart, and taking a probabilistic view on what the market is likely to do. But early on, we looked at 43.22 right in here. Oops, right in here. Ugh, right in there, and we had a very clear test early on in that 43.22. It went to 43.22.50, and it ran up and it put in a almost a double top at 43.31, giving us about a 9 to 10 point rotation up, which was a bit of an impulse. But once it broke down, so let's zoom in a little bit here, just kind of a teaching moment. So 43.22 is I tried to catch it. I tried. Here we go. Something like that. It's actually right here. But once it broke down, you had this pullback to VWAP mid. It really tried to squeeze there, and then it failed to push through. Big battle in that area. You could see the big dots, big sell and buy dots. And then the idea here is, if you're not sticking your neck out at the day generated levels, the day generated prices at the mid and so on against that 43.22 from the bottom, yet a second opportunity for it to break down right here, right in that zone. So we see that it tested, retested, dropped through. So it took out this last low, pulls right back in there into the 43.20. There was actually a collision here, and then explosively breaks the low. Look at this, the way it's set up, this IB low as well. It had a nice little zipper here to lean against. It ended up leaning against it right here with another, look at that, another collision right at the zipper. Right here, right there. It's hard to see, right there. And then tried to pop back up, and that little pop on the failure, on this price action failure, sets up a short break, pullback to the prior settlement, IB, and then continuation. What was hard to see on a short time frame was the rally. Look at this thing, just rips up, really big rally, very strong delta, very strong lifting, really big rotation here. And what we have here is a market that's leaving an excess behind. So let's zoom out a little bit and look at what's going on down here that generates that kind of energy, right? So yesterday we had one vol sigma somewhere down here, one vol sigma that's a statistical kind of volatility based indicator, but excuse me, but I talked about this all important. Oh, I actually had to move myself out of the way yesterday to talk about this. This all important April MC, huge, a huge area, big battle through most of April, and half of May. And I talked about, if you recall earlier in the week, that if it's not able to get any traction and it doesn't reject the value area down here, it is very likely to get down to 42.30, right? Well, guess what? Yesterday, the low is 42.77. 4282 is the top of value, the MC value right here. And that's where it kind of poked in and just buyers came in. And so that's one factor. So I'm not going to sit here and pretend like I have the foresight to to know that that's going to happen. It just isn't in my wheelhouse to figure out that, hey, it's going to go down into this value area and hold it. What's important to me is to be aware that there is that value area. We talked about it before, but it's to me, it's almost like drilling for oil or water or gas, right? You have a lot of information about the topology, about the history, the geology of a certain surface of Earth, and you go and you can drill to see what's happening and so on and so forth. We can't drill, but based on all of the information you have about what's happening in the area around it, you expect that you'll have a pretty decent, not 100%, but a pretty decent probability that if you drill right here, that you might strike oil. But you're prepared and you're not going to invest all of your company's resources, your drilling company's resources, into this one well. You're just going to set a budget that you're willing to spend to bore down and find that oil, and then you're going to invest into creating an oil well right there. So that's essentially what we're doing as traders. Our stop is that investment. Our stop is not our stop. Most people take the stop that we take as a result of a trade that doesn't work. They take that as almost a very clear sign that they failed. There's an association in our mind with stops being failure. When a stop is only an investment, it's just an investment. So you want to keep that investment as small as you can, hopefully for a decent return, and you want to make that investment as many times as possible, right? And that's how we survive as traders. We survive. What are we surviving? We're surviving the randomness of the market, okay? And so this is one of those areas that can potentially give us a bounce, right? And it did. But what's important is what happens afterwards. We see the bounce. Okay, now what? Now we have something to trade off of. So my job is not to determine that this is the area. I'm not an analyst to a point that, I'm going to sit there and bet that, okay, this is the area where the market's just going to bounce and we're going to have a 40 or 50 point rally like we did yesterday. We bounced yesterday from 42.77 to 43.30. That's quite extraordinary in terms of a run up. And if we look at it on the TPO chart here, this is kind of compressed. It's really wide. You can see J period, K period, and L period are what covered this entire range. That's an unusual rally, but what's important is at the bottom of this rally, you can see, what are you seeing at the bottom of this rally that is really remarkable? This is what's important, right? So we went and poked the prior day's low. We revolved upwards, we rotated upwards, then we came right through. We almost came back to the prior low from below. This would have been a nice little setup here, classic price action setup, tiny bit of a single print there. And then it starts to move down. You can see there's overlap, 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 right? And then overlap down here. So there's a little bit of overlap. But as soon as it starts to rotate up and we have range extension up, J period versus I period, you have very little overlap. You see, this is a lot of aggression on the way up. A little bit of overlap, which is expected. That's against the point of control. And then it kind of peters out. And then what it does is in the last bracket at the closing range, we end up pulling right back to the prior day's low. But what you should notice here is there's hardly any volume down here, especially at the excess. So what does this mean? This is a classic excess, not access, excess low. This is an excess low. Generally, excess lows are out of balance, unacceptable prices. They're so cheap. The buyers came in and they took them in with volume, and we have that. We have pretty good volume. As I showed you, the delta was lifting pretty strong yesterday. We saw very large lots come in and just lift, 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 lift. This creates an excess low right in this area where we are right now. Everything below here starts to contribute to an excess low. The probability, the historical probability that the market will hang out here today is quite low. It's quite low. Here's the catch. That's the historical probability. But if it does hang out here and it starts to walk itself down, we get below 4,300 and we start to walk down, that's a lot of trouble for buyers. Knowing that we had a swing from 42.77 to 43.30 on a lot of volume yesterday, yet here we are retesting that area. That's a lot of volume that is vulnerable. These are um, late shorts that are covering. These are new longs that are potentially coming in, and they are, in both cases, those are weak participants, and it's likely to walk down the flag here and retest that low. So the expectation is that it doesn't do that. So to me, this is another day where I'm going to stick my neck out here and say that I expect to buy pushes down today. Any structure that's pushing lower, I expect it to fail, to be weak. As soon as it shows me that it's weak, I'm looking to get long and be on the side of it coming back to settlement, which is 43.15, to the prior point of control, which is basically yesterday's point of control, which is basically 43.15, 43.14, and to not just yesterday's point of control, but the day before that's point of control is 43.16, 15 or so. So we know we have multi-day accepted balance above. I'll show you that. Again, this is not me trying to be an analyst here. This is just putting together the plan for the day. Here's your settlement, 43.13 half. Here's your point of control, 43.14. Here's the prior day's point of control, 43.15. So this area, 43.15 to 14, is acceptance. Very clear. Point of control, settlement after this run up. And we are currently down here. And so the question is, as we push through the 4,300 right here, do we start walking down? And the expectation is no. The expectation is we open, we pull back, consolidate, form a price action structure to get long, looking for 43.15 to unload most of the position for about 10 points or so, and then looking for it to try to run again the way it did yesterday. We did leave an excess in L period here on this bar. You could see the wick is quite wide, but we're accepting these prices. We're struggling to accept these prices. Okay, so that's where we stand. I know that's a very technical discussion. You have to understand market profile. You have to understand volume profile. So if you're new to this, this maybe just seems like gibberish or hocus pocus. But what we're describing is how all prices across all materials and all commodities, stocks, Forex products, CFDs, whatever. This is how price is discovered all the time. In fact, this is how price is discovered at your local grocery store or on eBay or on Amazon or whatever. This is how the process works, right? You have a huge fire sale, but you don't expect prices to fall there when people are lining up around the corner to buy up all inventory. That's what happened yesterday below here. All inventory was being purchased, and we saw it in evidence of the velocity of the trade, the range of the trade, and the volume, the strength, the power of that trade shows up in volume. So think of price as a direction. It's are we going up or down? That's all the price is saying. Price is a direction, and volume is the force behind that direction. So essentially, it's a vector. If you're someone in physics or math, is what we call a vector. It's like direction plus the strength of that direction. And yesterday it pointed upwards, and today, even though my bias once again, I was probably early yesterday. I'm probably early again today because we're continuing to one time frame down. We are incapable so far of taking out these highs. And yesterday, I was expecting it to push back through and take out the 54 high, expected it to take out this high here and start moving back up, at least into 63 yesterday, and it failed to do that miserably. It looked good at the open, but it couldn't do it. And I'm expecting that again today. I'm probably early. However, as a trader, I'm not committed to any particular direction. So if it's unable to do so and you see it fall through 4,300 today, and it's really not able to push back up, we should expect, my expectation is it'll continue to move down because everybody that got long yesterday or covered is now has a weak hand, and it's likely to retest that excess. But we do have an excess low from yesterday, and we did get an excess high on the close. But the magnet's 43.15, and let's see what happens. I know we talked a lot. I talked a lot about one thing here, but it's really important to understand how that works, because you can have a very, very strong hand in the market. Looking at NQ, kind of looks the same. Actually, NQ is stronger. Look at the NQ. It is much, much closer to ending its one-time framing down. The NQ did not show as good an excess, but still it had an excess yesterday. The NQ is not expected below 14,650 this morning. I'm not expecting it to clear below there. So if it does get below there, this could be troublesome for those late buyers, and it could run its way down just like the S&P. But the NQ is expected to turn back up into the prior settlement, into the prior point of control, and then from there we may balance out today, and then tomorrow is the end of month, quarter, and so on, and we may make that run finally. I'm not advocating that we break the one-time framing down and rally, but this is how it's kind of shaping up to be. We are creating what looks like a rounded bottom here with an excess low. Hit me up with your comments if this is confusing or too much. I know this was a long one, but there's a lot to talk about there. Hopefully you picked up a thing or two today. Don't trade on what I say, trade on your plan only. But I'm providing you with different ways to look at the market than the conventional, moving average wisdom type of thing. Good luck.